Eric Muather with Muather.com. It is August 25th, 2016, and here we are trading with the markets pretty much, let's call it, unchanged. Let's take a look at those charts. Again, we begin with the NASDAQ weekly, NASDAQ weekly, as it is doing its best to break out. So we've been watching this for a little bit of a gauge as to how to approach the current market. So right now, we are still holding above that threshold number, dependent on this previous 2016-2015 weekly closing high, and that, as you know, is 5214.00. So right now we are a little bit slightly above that. So as long as the market is above that range, we continue expecting the market to be healthy. And we also know that if the market does eventually roll over, and if it cracks back below this level here, that represents a serious breach, and maybe this is where the market starts seeing a significant pullback. Now keep in mind, we've really come on a short-term relative basis, we've really moved substantially higher off these lows here. This has been a straight shot, almost straight weekly closing highs or weekly positive closes, and so maybe the market is due for a pullback. And again, the number to watch is this number right here. It's a simple number. Anything above that is good, and if the market is below that, then obviously that's bearish. Right now it's above that. We have to conclude the market continues to be healthy. Now this is also similar in analysis to the previous or to the current monthly breakout considerations here. So month to month, we know that as long as the NASDAQ is holding above 5128.28, as long as the market is above that level, we know that this is a good reactional breakout, and the market continues to be healthy as long as it is above that number. Right now we are trading above that. That's good. And we also know that down the road, should we find ourselves trading below that number, then that's going to be a red flag suggesting that the market might see lower prices. But for now, it's above that. We have to assume the market net for now continues to be healthy. Let's take a look at the Dow. And again, this is just pretty much the same, and we're pretty much going through the same analysis because the market's been stuck in a very narrow range last couple of weeks, and we still continue trading within that narrow range. So here the Dow had a chance to break out, and you've seen that over the last 1, 2, 3 weeks, including this week, we've pretty much failed to stay net above the Dow's buy point of 18,570.85. So this is not good on a short-term relative basis, because a good market should break out and stay above breakout levels, but here we closed above that number and we rolled over. That's not a good sign. And this chart by itself is one that the bears can actually gravitate to as a reason why they should be looking at the markets to pull back, maybe even have some short ideas. So this failure on the Dow weekly to break out is not a good sign of markets short-term intentions. If we take a look at the daily for the Dow, just want to sensitize you to a little bit of an observation here. This number right here. Right now the Dow is trading at 51.47. The risk, and it's only risk until it takes place, the risk here is that the market stumbles a little bit and moves below the 50 RSI level. So if the RSI cracks back below 50, on the day it moves below 50, expect a big down day, because that's generally what happens. We're very close here, so we need to start looking for any signs that the market would actually be preparing itself for a big drop. And keep in mind the backdrop of the most recent daily highs, and this is something I've been saying, is that yes, we're making higher highs, but this is coming at the expense of the RSI not making a higher high, and that by itself is a reason as to why this market is already leaning towards a pullback. That negative divergence is not very healthy, and eventually that negative divergence could bite the market with a pullback. And the level and the depth of any pullback is hard to ascertain until it happens. Now, if we take a look at the Dow from a monthly perspective, a little bit of a trap here. Keep in mind we've been saying that as long as for the month the market is positive, as long as the market is positive, whoops, let me take that off. Positive move in the market is bullish. Now, I've also been saying if the market turns red for the month, in other words, if the market turns negative, that creates a little bit of a problem. And so we are seeing the market right now higher by about 44 points in terms of the Dow. So here we need to watch this. The more it's pressed down, the more it pulls back, the more it turns negative for the month, the more the bears are starting to take control of the current market environment. Next, let's take a look at the Dow Transports. And the Dow Transports by themselves don't look very healthy. And the reason being that they're coming back to challenge a recent resistance line on the weekly. As you can see, this is a problem because we've come to this line over the last couple of weeks, and every time for some reason we hit that line, we are rejected. So this continued rejection here is not healthy. And keep in mind, the more we are rejected on that line, the more we come back and cannot move above this line, the more at some point we might be pressed down, and eventually this might lead to a serious pullback. So that's one thing to watch for here. Either we get a breakout, but continued resistance and slight draft below that might not be good. Keep in mind we're trading below, slightly above 50. On the week, the market eventually cracks back below 50 on the weekly RSI. Expect a big down week. Now this is confirmed by the daily, by the Dow Transports daily, because again, here we see that if you take the highs and draw a line something like that, you can also see that it is showing recent double top resistance here and here, and also the daily coming inching very close to the threshold on a daily basis. If the RSI cracks below 50, expect a big down day. So there's a little bit of a problem here. In fact, if I take a look at the price, even the price, which is not generally what I look towards, because price in my opinion is not as important. Let me take that back. Sentiment to me is king, and the RSI to me captures sentiment, is what I'm trying to say. Here we can see also that this level here has been a little bit of a resistance every time market comes here. It's been pulling back and draws a nice straight line, and we can see recently on the daily this has been confirmed as resistance. So we know for a fact that if the market cannot move above that threshold number here, and the more we continue showing resistance and a pullback, the more it becomes a reason for a bigger drop. And at the same instant, it gives a nice point of reference, because if the market can break out above that line, break out above this line, then we get a chance for markets moving higher. Now that's one view. That's 2 points to resistance. Let me show you another one, which is also point to the same thing. A recent RSI break here in April brought the market off the current highs for 2000, and so this high here and here, the highs for 2016. And so we see that was a resistance level, and so we draw a line from here, which should be something like that. Now you can see we've hit this level once, a couple of times actually, and every time we seem to stall. For example, resistance here for the highs there, resistance here for the highs there. We came here, we showed uniform activity above the red line, back below it, and again also there for the highs here and here. And you can see we came close. We didn't hit that precise level, but we came close enough. Again, we see that this is still being confirmed as resistance. So you combine that with the previous line that was showing resistance, and you can see that the Dow Transports by themselves continue to insist that the market is not looking healthy for now. Now, a good market is complex. Now, let me show you why I say that. We can see here, if you want to look for reasons why the market continues to be healthy, I'll show you simple lines. This is the S&P 500 hourly. Draw a line connecting RSI lows. It should come something to like this. And recently, we see we are coming here. Market is finding support. So clearly, hour to hour, until we break below this line, the market continues to be healthy. And keep in mind, I talked in the last video, there's top side resistance and there's bottom side support. We are stuck in a range for now. And if you take a look at the 30-minute chart, you see another type of support on the 30-minute chart, bottom side support here and top side resistance. So we are stuck in a range. Ultimately, a movement above this range, either for a breakout would be bullish or for a breakdown would be bearish. But you can see that if you really not insisting on a direction or picking a direction in advance, that this does confirm that the market has had a chance of bouncing off the lows for the day and even late yesterday. So anyway, bottom line is we are stuck in a range as far as the hourlies are concerned. So pretty much we have to wait for some of these things to resolve. Now you take a look at USO, and I won't spend too much time because sometimes it's just good to keep it as simple as we can. Down about 3-4%. Why? Because the RSI on the weekly, as we discussed on Sunday, is moving below 50. Again, as you move below 50, you tend to have a relatively huge reaction to the downside, just like we had a nice reaction to the upside last week as the market punched above 50. Moving above 50, good reaction higher. Dropping below 50, as you can see this week, net suggests a reaction, a big reactional move to the downside. Since we are down for the week on the RSI here on the 50 level analysis, we have to assume that for the week it's hard to envision a strong reversal higher. Now really, I don't want to do this, to be very honest, but I will. If you take a look at the long-term monthly charts here, and like I said, really just this is repeat. But there's a top side resistance here on the GDX coming back to test this level as we've been discussing. That level comes from the break, and again I'm just rushing through some of these things. So this sell signal here continues. So month to month, not a good setup. We know that, we've been expecting that to be the problem. We take a look at gold, and really no change in terms of the outlook on a month-to-month basis for now. No surprise that we are struggling. Again, go back to these lows. You can even see that what was break here is being back tested and for now is failing. Not a good sign of what the market wants to do. In fact, you can even argue it's a double. It's touched that line twice and seems to be failing here and here. Not a good setup on a month-to-month basis. It also corresponds nicely, or I guess bearishly, with this break that we've been discussing, and of course we draw a line from there. Again, we see that we are coming here, we hit the resistance. So on a month-to-month basis, gold, metals, silver, all look very bearish. And of course I did discuss in the last video the possibility of them breaking out on a monthly chart, which would suggest, for example, for the GLD, that if the GLD were to want to really press the agenda and move higher, the first order of business would be for it to break out. It would be to break out above the recent monthly closing high, and of course the level there that we are waiting to see whether it can break out eventually is a breakout above 128.98. Otherwise, the more it's down for the month, the more the monthly charts are controlling, the more to expect lower prices. Having said that, just want to show you why markets are complex. On the daily for the GDX, we see that it is coming back to test the RSI lows line, and let me show you what I'm talking about. Let's go with, you take the lows here, extend them out, right? And right now you can see without too much adjustment we are coming back to test this support line. So that's one potential for where this might find support. Anybody wanting to go long, or they want to insist here, is for this to show support. In other words, you want to see this being respected and the market starting to coil back up, suggesting that around here you can take a calculated bet that this is going to turn around and move higher. That's one view. I'll share with you a second view, which is also bullish right now, or not bullish, but at least a hint of a potential move higher. If you go and investigate where the most recent move in gold began, or the true momentum in gold of the late December or early from the beginning of 2016 during this nice upward trend. It all began here. That corresponded with the RSI breakout right there. So we draw a line from here, which should be somewhere there. And you'll see that without too much adjustment, double bottom support here on the line for the lows right there. Market moved higher. Here, to me, is uniform activity below the green line back above it, which makes this a re-entry zone. Market's been higher since then in terms of the GDX, and again coming back to test the green line right now. So if anybody is looking for a reason to be long gold, if it turns positive around here on a day-to-day basis, and if two things happen, I'll show you two things. Number one, it needs to hold this line right there. Okay, as we discussed, it needs to hold that but with uniform activity. And then number two, it needs to confirm that it has found support right here. So those two things have to take place, both of them pretty much indicating that if you see support around here for the GLD, then you can take a calculated bet that this is where they turn around after a drop this past couple of weeks or days. At the same time, caution, because if this fails and we see a break below those two lines, the RSI is trading below those two lines, chances are that now it is broken. I want to end this analysis on the gold trades by taking a look at the hourly charts, and I'll show you why. Take a look at the GDX, go to the hourly. The problem that I see right now on the hourly is here. We spent some time below RSI 30.9 on the hourly, which suggests that it is going to have to test these lows here. The same thing can be said about silver, SLV. You can see that because it spent some time here below 30.9 on the hourly, it suggests to me that we are going to have to test these lows, if not break these lows. So short term, I would still lean towards gold being under pressure. But of course, if the daily charts turn, if we see support on that GLD chart, then there you have it. That's a reason why it could bounce. To conclude the video, what I'm going to do is take a look at the last three picks, and I'll show you why they are failing. I'm not going to show you why they are failing, but they are failing to break out. Here we can see that the VALE is failing, so this is not a buy. You don't buy this, as we had discussed. You don't buy this until at some point it moves above 6.02. Right now it's retreating from this level. You need to see this above 6.02, otherwise ignore. The other stock we were talking about was NTDOY, and we used the monthly chart specifically because we are using this entry here, and we talked about any pullback bringing it closer to this buy point. The buy point here was at 25, the ideal buy point 25.62. So it's pulling back a little bit, and you want it to be within 5% of this. So 5% of 25.62 or thereabouts, which is 1.05. So you're looking for anything closer to 20, let's call it anything around $27 would be reasonable buy point. In other words, would give you a 5% window. So you want to buy it slightly somewhere around here, a window about 5% above the ideal buy point on a monthly chart of 25.62. So you can give it a little bit of a wiggle room to come a little bit lower. So anything between 25.62 and let's call it 27 thereabouts is logical 5% entry level. So right now it's a little bit above that. So you can wait for it to pull back a little bit deeper than that. Now, we also mentioned that for this to really be a momentum stock, it needs eventually to stay above 69.1 on its monthly chart. Right now at 69.11. All right, so it's pulling back, might give you a chance for a re-entry there. The other idea that I mentioned was RSX. We were using the most recent monthly high going back to late, I guess, to the highs of 2015. And here it is not a buy right now because it is not above 19.02. which is this monthly closing high. So if you want to play Russian market by way of owning this ETF, you have to insist that we see a breakout above 19.02. So we shall see how things settle out. The market continues to trade sideways, no gain, no loss for the day. Otherwise, let's see how things play out. If gold turns around and has a positive gain on a day-to-day basis, the daily charts might be indicating support, but the hourly charts are pointing to a retest of recent lows, so it would not surprise me at all that gold continues being under pressure at the end of the day. Eric Moather with Moather.com. Good luck, peace, and blessings. And so it is. E-A-C-S. Wait for it. Kisses, 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 and blessings, blessings. Hugs, kisses, blessings. Yeah. Testing. Testing.